Good day all. Today we are going to be discussing on sources of government revenue. A brief introduction to government revenue and the sources of government revenue. The main purpose or objectives of government is to provide security and welfare to the nation. And the main sources of government revenue, which are taxes, fine, fees, all these are expected participation from all the citizens to assist the government to meet up with their aims and goal. So at the end of this chapter, we are all expected to understand the following subtopic as far as sources of government revenue is concerned. So we are going to be discussing on the major revenue collection agencies of the government, the list and sources with their classification of government revenue in Nigeria, including their groupings into the Consolidated Revenue Fund. We have the Federation account, we have the Development Fund and the Contingencies Fund accounts. We'll also look at traces, that is the transfer of appropriations from the Federation account and the Consolidated Revenue Fund accounts into Development Fund and Contingency Fund account respectively. We will discuss on the differences, types of fund, and we are going to prepare a simple calculation on how these funds were being separated. And lastly, we will establish the procedures that will be adopted to estimate government revenue needs in the country. So a brief introduction. Government generates revenue from various sources to run the administration of the nation and execute development projects in all sectors of the economy. Such revenue is generated through efficient and effective machinery. And what are these machinery? So these are the revenue collection agency in the country, and allocated through the budgetary system to the spending organizations for their operations. So a good system of revenue generation is paramount to ensure that government mobilizes enough finances for the expenditure of the nation to meet the varied needs of the people. So governments were being put in place to see all the activities of the nation, and at the end of their term or tenure, they are all expected to give account of all activities that has been carried out by individual elected or appointed public officers. So with this, we are going to be looking at all the sources. How do government generates their revenue? What do you understand by government revenue? This is a means at which government generates funds into the general into the federation accounts that will be used to cater and provide all amenities that are expected of all public officers. So government revenue refers to the income generated by the government through various income inside, that is within and outside the particular government. So the following are the general sources of revenue of various governments. So these classes is giving us a general sources of government revenue. We are still going to categorize the types of revenue and the nature of each of these revenue according to their heads and sub-head. Taxation. Taxation is a levy that is imposed on both the corporate body, the government, and the general public in order to ensure that the government will provide all social amenities. So this is a compulsory levy that is imposed by the government where no direct benefit is received by citizens from the government. So the levy is usually payable at different rates depending on the nature of economic activities conducted by an individual or firm. So there are different levels and different rates at which tax it is being imposed on individual or corporate organization. So depending on the nature or types of income that are being earned by individual or corporate entities. So types of taxation, we have pay as you earn, we have corporate income tax, we have payee. We have fees. This is another category. This is another sources of government revenue, which is known as fees. So these are payments made by users of public services on the cost sharing basis. So there are charges given to any public officer or individual that makes use of government's property. So these are charges on individual to make payments on services that is being rendered by government. We have fines. Fines is also one of the sources of government revenue, which is mostly imposed on breach of laws or those that are going against the rules. So this refers to the penalties imposed by governments against law breaches. Example of this type of fines is someone that is driving on a wrong side of the road, popularly known as one way. So there will be a fine that will be imposed on any defaulters that are going against the traffic rules. That's one of the typical sample of a fine. So any person or firm from which has been proved guilty by law must be imposed to specific fines and compensation for the destruction made by the person or firm and the collected amounts being revenue for the government. Another sample, if you are making use of firm or company or corporate organization that were being fined, we can make use of delay in payment of tax into the government purse. So corporate income tax are expected to be paid by firms or organizations, and there are specific periods at which this fee is expected. So once the corporate organizations exceeded the period at which they are expected to remit such fees, so such organization will be fined for a fee which is beyond the limit at which the government has set up their threshold. We have grants. This refers to a non-payable money that is received by the government from another government with the aim of helping such governments either to improve or to start a project which is of grand importance to the society of such governments. And most especially, this type of grants are usually given to less privileged government or country in order to assist in their economy. Another government revenue is foreign investment. So government can carry out investments in the local revenue that is being generated by the government outside the country. Sometimes government may decide to invest beyond its boundary, provided there is a proof of suitable and profitability cash flow, sustainable and profitability cash flow. That is, there is a hope that such funds, such investments will bring in future economic benefits into the country. So the obtained amounts after operation constitutes revenue for the particular government. So any profit that is being generated from foreign investments will also form part of the government's revenue. We have public debt or borrowing. Public debt or borrowing. So this becomes an important source of income to the government. When revenue collected from tax and other sources is not adequate to cover government expenditure. So in this manner, the government has the right or the opportunity to source for revenue outside the country, either internally or externally. So that is public debt. So this is also part of revenue from the government. So such borrowings become more necessary in times of financial crisis and emergency. Example of these financial crises and emergencies are war, drought, insecurity, and so on. So public debt may be raised internally or externally. So internal debt refers to public debt within the country, while the external debt refers to loans floated outside the country. We have sales of national assets. This also forms part of the sources of government revenue by selling out national assets. And this type of assets, the government might have looked for other means to generate revenue. And before this option could be arrived at, so such national assets might have been seen as non-usable again, or the need may not be so needful as at that particular period. So such assets can be sold. Later, the government can still look for a way to generate revenue and get back such assets. So selling national assets through privatization programs has constituted a significant source of government revenue across the globe. Revenue from this source is usually used to improve finances or invest in new infrastructure and other key priorities. We are moving on to revenue collection agencies in Nigeria. Collection agencies, they are the party that are involved in accruing government revenue into the federal purse. And in Nigeria, we have several agencies that are responsible for revenue collection from various sources, and they are as follows. One among them, which is the NNPC, known as the Nigerian National Petroleum Corporation. We'll be looking at their functions and their objectives as part of the revenue collection agency in Nigeria. The NNPC has sole responsibility for development. We're talking about upstream and downstream development. These are activities, both upstream and downstream, they are activities. So upstream refers to the exploration and production stage in the oil and gas industry. That is upstream. While downstream refers to the sales, construction, and maintaining tank farms in oil and gas sector. So, and it is also charged, part of the responsibility of the NNPC, with the regulating and supervising the oil industry on behalf of the Nigerian government. So in specific functions, the roles of NNPC include the following, so which also form part of these upstream and downstream activities that I've explained earlier on. So we have the exploration and production, refining, purchasing, and marketing of petroleum. its products and byproducts. So this is one of the major functions of NNPC. So they are into the exploration, that is the introduction stage in oil and gas sector. The exploration, that is the extraction and production. We have the refining, purchasing and marketing. Purchasing and marketing fall in the aspect of the downstream activities or developments of petroleum. Its products, that is the petroleum products, and byproducts, other products that the crude oil will be used to produce. Lines, tanker ships, and other facilities for the conveyance of crude oil. So NNPC also provide pipelines operation, tanker ships, and other facility. So the operating pipeline is the transportation of crude oil from one product machine, equipping and maintaining tank farms. We have research and development and doing anything for the purpose of giving effect to agreements entered into by federal governments with the view of seeking participation by government or cooperation in the activities within petroleum activities. We have the Federal Inland Revenue Services. The Federal Inland Revenue Service is one of the agencies that are responsible for government collection, government revenue collections. They are to control and administer the different taxes. So they control all the federal tax in the federation. So examples of these different taxes, which include, we have the Company Income Tax Act, we have the Petroleum Profit Tax Act, Value Added Tax Act, Personal Income Tax Act in respect of residents of the Federal Capital Territory. We have members of the Nigerian Police Force, members of the Armed Forces of Nigeria, as well as staff of Ministry of Foreign Affairs, and non-residents. We have the Capital Gain Tax Act and Stamp Duty Act in respect of residents of the Federal Capital Territory. And lastly, we have the corporate bodies and non-residents. So all these are the functions of the Federal Inland Revenue Service. So they control and monitor these different types of taxation. So majorly, which are meant for at the federal level. So they control the company income tax, the petroleum profit tax, the value added tax, the personal income tax. And this type of personal income tax are in respect of residents of the federal capital, members of the Nigerian Police Force, members of armed forces, as well as staff of the Ministry of Foreign Affairs. So all these categories of tax were being controlled by the Federal Inland Revenue Services. So the FRS has been striving to operate a transparent and an efficient tax system that optimizes tax revenue collection and voluntary compliance, that is, they ensure compliance by both corporate entities and individuals. We have the state boards of internal revenue services. So these are revenue collection agencies within a state. All states in the federation has their State Board of Internal Revenue Services Limited. For instance, Ogun State has their own Internal Revenue Service Limited. The Lagos State has their own Internal Revenue Service. The Kwara State also has their own, as well as all other states in the federation. At the state level, so these are the categories of tax that are expected from revenue generation agency in this at the state level. The Personal Income Tax Act of 1993 established the State Board of Internal Revenue Service, SBIRS. with the responsibility for personal income tax of individuals and non-corporate bodies. If you look at the Federal Inland Revenue Service, we can see that we're having corporate bodies as part of revenue generation for the Federal Inland Revenue Service. So at state level, the personal income tax of individuals and non-corporate bodies are being collected by the State Board of Internal Revenue Services, except residents of Federal Capital Territory, members of the Nigerian Police Force. So all this exception, which was mentioned under the Federal Inland Revenue Service, were not to be collected by the State Board of Internal Revenue Services. So they are members, residents of the Federal Capital Territory, members of the Nigerian Police Force. We have the members of Armed Forces of Nigeria, as well as staff of Ministry of Foreign Affairs and non-residents. So in addition, it has responsibilities for Capital Gain Tax Act and Stamp Duty Act, except those aspects that are relating to residents of the Federal Capital Territory, corporate bodies, and non-residents. So in general, the State Board of Internal Revenue Services has the power and responsible for the following functions. One, assessing, collecting, and accounting for all taxes, fees, fines, levies within the states. So the Commissioner of Finance is to prescribe the manner the board is to account for this type of, all these categories of taxes, fees, and levies that are being collected by the State Board of Internal Revenue Services. They supervise the collection of all revenues due to the state government with other ministries, extra-ministerial departments, parastatals, and government companies. So they carry out the supervision of all revenue within the states. They revise all obsolete rates collectible by the board and initiate review and advise the government on it. So when there is obsolete, those rates that are not in vogue anymore, there will be a review to those rates and advise the government on any new rates that will be implemented within the state. They liaise on tax and revenue matters with the federal government directly through the Joint Tax Board and make recommendations where appropriate to Joint Tax Board on the tax policy. So whenever there are discrepancy between states and the federal collection, so they advise the Joint Tax Board that look into the tax policy. What are the tax law, tax reform, tax registration, tax treaties, and exemption as they require from time to time. To administer the provisions of the Personal Income Tax Act of 1993 as amended and relevant tax laws within the states. They also have the functions to generally control the management of the service on matters of policy subject to the provisions of the edicts and imposing discipline on employees of the state's internal revenue services. Another agency of government's revenue is known as the Department of Petroleum Resources, DPR. DPR has the statutory responsibility of ensuring compliance. They carry out regulatory compliance to petroleum laws, regulations, and guidelines in the oil and gas industry. They work together with the NNPC to look at what are the statutory requirements on registration, exploration, transportation, distribution, and sales of petroleum in the country. So the discharge of these responsibilities involves monitoring of operations at drilling sites, producing wells, that is in production of oil wells, production platform and flow stations, crude oil export terminals, refineries, storage depots, pump stations, retail outlets, and other locations where petroleum is either stored or sold, and all pipelines carrying crude oil, natural gas, and petroleum products, while carrying out the following functions, among others. Other functions of the DPR include the following: supervising all petroleum industry operations, that they carry out supervision on oil petroleum industry operations being carried out under the license and lease in the country. So they are the regulatory body that ensure compliance. They maintain and ensure compliance to all petroleum laws. So monitoring the petroleum industry operations to ensure that they are in line with national goals and aspirations, including those relating to flare down and domestic gas supply. The DPR also ensures that health, safety, and environment regulations conform to national and international best oil fields practice. That is, they go from one oil and gas industry to the other to ensure the compliance. They are all complying with health, safety, and environment regulations that are being carried out by the petroleum or oil and gas industry. Maintaining records on petroleum industry operations, particularly on matters that are relating to petroleum reserves, production or export, license, and lease. They advise government and relevant government agencies on technical matters and public policies that may have impacts processing industry applications for leases, license, and permits. This is also part of the functions of the DPR. They carry out industry applications for leases, license, and permits. They ensure timely and accurate payments of rents, royalties, and other revenues due to governments. That is, they ensure payments were being made to governments as at when due. Maintaining and administering the National Data Repository, NDR. So all these are the functions of DPR. So Nigerian Customs Service, NCS, this one among the collection agency, government revenue collection agencies in Nigeria. So the Nigerian Customs Service function can be broadly classified into two main categories. We have the core and other functions. The core function of the NCS, Nigerian Customs Service, which are collection of revenue and prevention of smuggling, prevention and suppression of smuggling. So these are the core functions of the Nigerian Customs Service. While other functions include, so the types of collection, the types of revenue collected by the Nigerian Customs Service include the import and excise duties and accounting for the same duties that is being collected. So imports, these are on goods that were being brought, that were being imported into the country, while the export are those goods that has been exported outside the country. They also charge excise duties on goods and services. So other functions of the Nigerian Customs Service. The category of other functions include implementation of government fiscal measures, generation of statistical data for planning purpose, that is to give it detailed data on all importation and exportation of goods for governments to plan properly. Trade facilitation, they aid governments trading. Implementation of bilateral and multilateral agreements entered into by governments. They are also into the collection of levies and charges. And lastly, they collaborate with other regulatory agencies or other collection agencies in Nigeria, which include the CBN, police, NDLEA, SON, NAFDAC, and FRS. That is, the work in hands with these bodies. And what are their needs? The CBN, these are the body that are in charge of all inflow and outflows, and they regulate other commercial banks. So they can also use the CBN to track or to detect those that are into smuggling. Police, they work in hand with police to get offenders. NDLEA, they also work together with the law, the enforcement agency, which are into drugs, which is the National Drugs Law Enforcement Agency. We have the SON, Standard Organization of Nigeria, NAFDAC, and the FRS, and so on. So in addition to this core and group of other functions that is being carried out by the Nigerian Customs Service, so the service also supports the combating of illegal commercial activities and trade in illicit goods. Examples are import of fake and substandard goods. Infraction on intellectual property rights, illegal international trade and endangered species, and illegal trade in arms and ammunition, money laundering, traffic of illicit drugs, illegal trade in cultural artifacts, importation of pornographic materials, and lastly, importation of toxic and hazardous substances, all these substances that may affect the usage by individuals. So they also assist to curb or to reduce the level or the rate at which importation of hazardous substance will be imported into the country. Now we are moving on to the sources and classification of government revenue in Nigeria. All the sources of government revenue were being classified under heads and sub-heads. So the federal government derives its revenue from different sources. The federal government of Nigeria revenue sources were classified into three groups. We have the federation accounts, revenue heads. We have the value added tax and the federal government account revenue heads. We pick each of these sources of government, categories of government revenue, one after the other. The Federation account was established by Section 162 of the 1999 Constitution of the Federal Republic of Nigeria. So the Federation account is one into which shall be paid all revenue collected by the government of the Federation, except the proceeds from the payee of the personnel of armed forces. That is, these categories of heads or revenue or sources of revenue include all revenue that are belonging to the Federation. This is known as Federation account. That is all income, all revenue that are belonging to the Federation. This is the categories of head that will be classified, the types of revenue that is entering into this account. So the Federation account is one into which shall be paid all revenue that is being collected by government of the Federation, except, so these are the exclusion that will not be included in the Federation accounts revenue heads. The payee of the personnel of the armed forces of the Federation, we have the Nigerian Police Force, foreign service officers, and residents of the Federal Capital Territory. So the Federation account is a distributable pool, the general pool, from which allocations are made to the federal, state, and local governments, respectively, on which terms and in manner that is being prescribed by law. This table shows the revenue allocation formula as far as the 1999 Constitution. So currently, the federal government of Nigeria has reviewed the new revenue allocation formula. This is just a typical way at which the Federation accounts special for in the generation in the So the federal government allocation formula as at 2020. So the current revenue allocation formula, which has fallen from 52.68 to the federal government, is currently having 25.62, while local government is currently having 23.73. So the formula to be used, or the rate at which the federation accounts will be distributed among the federal, states, and local governments to be used in examination condition will be provided by the examiner. So these are other explanations on the revenue allocation formula as it is being stated in the 1999 Constitution. So these are other notes. We have 13% of revenue derived from oil sources goes to the states from which it is obtained in consonance with the principle of derivation, so which is known as 13% derivation. So these are the cost of collection that will be paid into the state at which the oil sources were being generated. We have 7% and 4% of gross revenue in the federation accounts, which are allocated to the customs. Then the rates stated above are first line charges, that is 13% sector revenue received from the oil proceeds. The 11%, which constitutes 7 and 4%, are 7% for the Nigerian custom, while 4% is for the Federal Inland Revenue Services cost of collection. Federation Account Allocation Committee. So these are the committee that are charged with the responsibility of revenue collection and distribution. Federation Account Allocation Committee was set up by Allocation of Revenue Act of 2004 to deliberate upon and allocate funds from the federation account to the 3 tiers of government. So they are the one in charge of the revenue allocation formula, which is federal, state, and local government. So the Federation Account Allocation Committee meeting is normally divided into 2 sessions. We have the technical session and we have the plenary section. The members of the Federation Account Allocation Committee technical section include the following. There will be having the Accountant General of the Federation as the chairman. We have the State's Accountant General, representatives of the agencies, that is the federal agency. We have the Nigerian National Petroleum Corporation, NNPC, as part of the members of the Federation Account Allocation Committee. We have the Federal Inland Revenue Services, Nigerian Customs Service, NCS. We have the DPR, Department of Petroleum Resources. We have the Revenue Mobilization Allocation Fiscal Committee. So these are the major committees that are charged with the responsibility of allocation of funds from the federation account into the 3 tiers of government. So they are the one to look out for the percentage at which the federal government will be having their percentage from the federation account, the states will be having their percentage, and the local government will be having their percentage. We have the Federal Ministry of Finance as part of the member of the FAAC technical section. We have the CBN, we have the National Planning Commission, MPC, Office of the States and Local Government Affairs, and we have the Office of the Vice President, Directorate of Military Pension, Office of Head of Service of the Federation, and lastly, Department Account Allocation Committee were being divided into 2 sections. The first section, which is what are the functions of the technical of revenue collected. They deliberate and consider the revenue available for distribution. They make recommendation to the plenary section. After a long deliberation by the technical section, there will be a recommendation to the plenary section in order to adopt, for the adoption of revenue to be shared to the 3 tiers of government. They also consider any other issue that will be sent from the plenary section. Now let's take a look at the members of the Federal Account Allocation Committee plenary section. We have the Honorable Minister of Finance being the chairman. We have the State Commissioners of Finance, the Accountant General of the Federation. We have the State Accountant Generals and representatives of the 13 organizations, each representative, a representative from the 13 organizations that were mentioned under the memberships of the technical section. And what are the 13 members? So they are Accountant General, State Accountant General, representative of the agencies, Nigerian National Petroleum Corporation, FRS, NCS, DPR, all these form 15 members. So there will be a representative from all the 13 members that were mentioned in that technical section to form part of the membership of the plenary section. Now, the functions of this plenary section are as follows. 1, to ensure that allocations made to the states from the federation accounts are promptly and fully paid into the treasury of each component. That is, all allocations that are expected to be paid into federation accounts will be remitted. Those that are supposed to be distributed to state, to federal, and to local governments were appropriately paid into each of their treasury on such basis and terms prescribed by law. And another function is to submit annual reports of its performance or activities to the National Assembly. We are moving on to the classification of government revenue or sources of revenue payable into the federation accounts and those that are payable into the Consolidated Revenue Fund accounts. These sources of government revenue are classified under heads, and we're having 17 heads in total. Head 1 to head 3, which is meant for revenue to be paid into federation accounts. While head 6 to head 17 are meant to be in Consolidated Revenue Fund account. Don't let us forget that federation accounts is a general pool of all sources of government, all sources of revenue by the government, except revenue from the payee of armed forces, residents of the Federal Capital Territory. We have the armed forces, police, and others that were mentioned under the federation account. Now, these are the categories of revenue that are expected to be paid into the federation account. Head 1 to Head 3 classify all the types of revenue that are expected here. Head 1, which is known as direct taxes. Head 2 is indirect tax, while Head 3 is mining. Head 1, direct tax. These are payable by individuals and firms, such as company income tax, petroleum profit tax, capital gain tax, back duty assessment, and personal income tax of foreigners residing in Nigeria. So these are the categories of revenue that is going into a direct tax category. We have Head 2, indirect taxes. So these are taxes on goods and services in the form of customs and excise duties, forfeitures, penalties, value-added tax, and so on. We have a 3. This is mining on natural resources. And this type of mining are oil and gas mining. So these are oil pipeline license fees. These are the samples of revenue that is being generated under the A3 or classified under the A3, which is mining. They are oil pipeline license fees, rents of mining rights, mining fees, royalties on minerals, NNPC earnings from direct sales, penalties for glass flood, and rent of oil wells. So these are the types of revenue that will be classified or recognized under the Federation account. We'll still talk about the types of expenditure that are expected to be borne under the Federation account. Now, let us move on to the next items, which is the federal government account, which is also known as Consolidated Revenue Fund account. The Consolidated Revenue Fund account is the type of account that is being controlled by the federal government. It is totally different from the Federation account. Federation account is for the whole federation. It is for the federal, for states, and for local governments. While Consolidated Revenue Fund, it is being controlled only, or the account, we can call it account of the federal government only. So which means the Federation account is distributing funds to federal government, distributing funds to state governments, and also distributing funds to what? Local government. Funds that will be received by the federal government from the Federation account will be part of revenue to the federal government account, which is also known as the Consolidated Revenue Fund account. State governments or states will also have their share from the Federation account, which will be known as what? Receipt from the what? Federation account. While local governments will also have their what? Their share from the Federation account. Now we are discussing on the Consolidated Revenue Fund account, which is also known as the federal government account. The Consolidated Revenue Fund account was established by Section 80 of the Constitution of the Federal Republic of Nigeria, 1999. And these are the types of revenue, except those revenue items which are specifically designated to other funds. All others shall be paid into the Consolidated Revenue Fund. What does this mean? We're having Ed 1 to Ed 17. Ed 1 to 3 are the categories of revenue that are going into the Federation account. All other revenue, aside from Ed 1, 2, and 3, will be recorded or will be recognized under the Consolidated Revenue Fund account. Now, the analysis of the various sources of revenue payable into this Consolidated Revenue Fund account, which is from Ed 6 to Ed 17. The analysis of various sources of income are given below. We have Ed 6. What is Ed 6? This is direct allocation from the Federation account at the prevailing rates. Let me recap. We said the Federation account is a general pool for federal, state, and local. So the total summation of all revenue that is being generated from the Federation account will be distributed among the 3 tiers of government: federal, state, and local government. So the types of revenue under the Federation account are Ed 1, 2, and 3, direct tax, indirect tax, and mining. And these are the types, these are the samples of the types of revenue that are expected under the Federation account. And the addition of all revenue that will be generated from Federation accounts, which is Ed 1, 2, and 3, the summation, the total, will now be distributed to federal government, state government, and local government according to the sharing formula. So the share of the federal will now be known as H6, will be recognized as what? H6, that is direct allocation from what? From the federation account. We have H7, direct taxes. H7, direct tax. These direct tax are other taxes aside from H1 taxes that is being recognized under the federation account. This includes pay of armed forces and police personnel. We have the foreign service officers and residents of the Federal Capital Territory. H7 and 8, we have license and internal revenue. These are realized from the issues of licenses. And examples are, we have the arms and ammunition license fee, we have goldsmith license fees, we have the radio and TV license fees, gold dealers license fee, and so on. And 9 is for mining, which is different from the mining that has been classified under a 3 of federation accounts. So the types of mining here, they include mining fees, rent of crown lands, royalties on gold, tin, iron ore, and coal mines. At 10, this is fees. They are fees received on services rendered by government officials. Examples which include court fees, court fines, medical fees, and so on. We have at 11, earnings and sales. Earnings and sales are derived from the use and subsequent disposal of government property. We have the sales of stocks, publications, earnings and sales. So these are terms, commissions on money orders. We have Head 13, which is on interest and repayment. We're having two categories of interest and repayment. We have general and we have state. So these are for general, these are interest and repayments of loans granted to individual by government, corporations, and government companies. The example is the repayment of motor vehicle loans, depending on the categories of loan or the usage of this repayment or of this loan. Head 14 is for interest and repayments under the state. So these are interest and repayment of loans granted to the state government. Head 15 is for armed forces, revenue that are generated from armed forces. And what are these type of revenue? So the sales of armed forces property, such as old vehicles and stores, constitute these categories of revenue under Head 15. We have Head 16, reimbursements. These are refunds for services rendered to the state and local government councils, public corporations, and other statutory bodies by the federal government. So examples of this type of reimbursements are, we have the audit fees and refund of overpayments made to government workers. Head 17 is for miscellaneous, which is the last head. So these are other sources of revenue apart from those stated above, that is from Head 6 up to Head 17. And examples are overpayment refunded, last deposits. So all revenue discussed above are paid into the Consolidated Revenue Fund account. Now, having discussed on income or revenue to the Federation account and revenue to the Consolidated Revenue Fund account, let's take a look at expenditure, which are the charges to the Consolidated Revenue Fund account. So the charges to Consolidated Revenue Fund are grouped as follows. We have all recurrent expenditure heads and the approved estimates. We are talking about recurrent. These are the expenditure that reoccur every year. Examples are personnel costs. These are in form of salaries. We have overhead costs and services of national debts. Under charges or expenditure to the Consolidated Revenue Fund accounts is salaries and consolidated revenue allowance of statutory officers. And these are expenditure that are chargeable directly to the Consolidated Revenue Fund, irrespective of the budget approval. The statutory officers include, we have the commissioners of the following bodies: Police Service Commission, Public Complaints Commission, we have the Public Service Commission, Nigerian Law Reform Commission, INEC, Independent National Electoral Commission, Auditor General for the Federation, President and Justice of the Federal Court of Appeal, Chief Judge and Judges of the Federal High Court, Chief Justice and Justices of the Supreme Court, and pension and gratuity. So these are entitlements of both statutory and non-statutory officers, including members of the armed forces. We have value-added tax. These are taxes that are imposed on consumptions of goods items, which the supplier or seller of goods or services add to the goods or services before selling it. That's why it is known as multi-stage tax. The introduction of VAT was necessitated by the need to boost the revenue of the government from non-oil sources following the fluctuations in oil revenue due to the gluts in the international market because of the changes in the international market of oil products. VAT was introduced in 1994 fiscal year with the promulgation of VAT Decree number 102 of the 1993 Constitution at the rate of 5%, and this is being administered by the Federal Inland Revenue Services. Presently, value-added tax is shared among the three tiers of government as follows. The federal government take 15% of all value-added tax, states take 50%, and local government take 35%. We have the State Joint Local Government Allocation Committee, SGLGAAC. This committee was set up to ensure equitable distribution of the statutory allocations of local government from the federation accounts, and 10% of the internally generated revenue of the appropriate state governments are shared to the beneficiaries in accordance with the 1999 Constitution, using the stipulated criteria, which include equality, population, primary school enrollment, and internally generated revenue. So this type of allocation is being controlled under the state. So this is a state joint local government account allocation committee, unlike the federal joint allocation committee. So the state also has their own distribution committee that carried out the distribution of all funds that are meant for the local government. The composition of the state joint local government account allocation committee include the following. We have the permanent secretary for the local government affairs, all the chairmen of the local government in the states, a representative of the Accountant General of the states, and the federal pay officer in the states. We also have a development fund account. This development fund account is different from the federation account, different from the Consolidated Revenue Fund account, and different from the state's allocation account. The development fund account is set aside for some specific goals by the government. The existence of this development fund was solidified by the 1999 Constitution. This fund was established for the purpose of capital development projects. And what are the types of projects that is being expected to carry out by this development fund? In a situation whereby there are some localities that are in need of capital projects, which the state or the local community may not be able to cater for. So this type of account is set aside for such purpose. The sources of money accruing to the development fund will be divided into four. We have the contribution from the Consolidated Revenue Fund. We have the external grants, external loan, and internal loans. The contribution from the Consolidated Revenue Fund, these are yearly transfer of money from the Consolidated Revenue Fund account. In the federal government wisdom, notwithstanding that the Constitution does not expressly state this. We have the external grants that is being paid into the development fund. These are usually received from the foreign countries and non-financial institutions. We have external loans. This may come from such foreign bodies as the International Monetary Fund. And lastly, we have the internal loans. So these are loans that are raised and retired within the country. They may be long-term loans raised through development stocks or short-term loans through treasury certificates and treasury bills which mature in 91 days. These are the revenue into the development fund account. Now let's take a look at the charges from the development fund account. The charges from development fund may also be categorized into 4 classes. The first one is summary of capital expenditure payments, followed by general administration. We have the external financial obligations, and lastly, we have loans made to state governments in Nigeria. The first one, which is summary of capital expenditure payment, that is all capital project that is being carried out from the revenue of the development fund accounts. This is expenditure incurred for the provision and maintenance of infrastructural amenities, such as we have the construction of bridges and dams. The construction of these capital projects, which are the major reason, the major purpose why the consolidated fund account is being created, was created. The second charges to the consolidated revenue fund account is the general administration, and these are expenditure items made for the provision and maintenance of army barracks, police stations, staff houses, motor vehicles, and hospitals. We have external financial obligations. Whenever there are external financial obligations that can also be kicked out from the consolidated, from the development fund accounts, this will also form part of the expenditure inside the revenue of the development fund account. So they are disbursements made for expenditure incurred to provide financial assistance to countries which are in need. So the relief may be in form of donations, grants, and aids to neighboring countries. So Nigeria can give a grant to Chad, can give a grant to Cameroon or any other neighboring countries that are in need of assistance. And lastly, loans made to the state government in Nigeria. So from the development fund accounts, there can be an expenditure which will be categorized as loans that will be made to state government in Nigeria. So there are different types of loans which the federal government grants to the states for developmental purpose, in quotes, for developmental purpose only. So the sources of finance into the disposal from the development fund can be diagrammatically represented as follows. We have the contingency funds. Inside the sources of finance into the disposal of development fund account, we're having contingency fund. The contingency fund has its legality under Section 81 of 1979 and the 1989 constitutions, and Section 83 of the 1999 constitution. The fund is set up to meet unforeseen expenditure, urgent situations occasioned by such as natural disasters. The contingency fund derives its income from the Consolidated Revenue Fund account. And lastly, the charges on the contingency fund account. A charge will arise on contingency grounds in exceptional cases where environment is not possible, that is, when authority is not granted, in terms of urgency, and where an application for additional provision reveals that the issue of funding cannot be delayed without causing serious injury to public interest. So the need cannot wait till a supplementary appropriation bill is passed. Let's take a look at this illustration, a practical illustration. Requirements. We are required to prepare for the year ended as 1st December 2002. For instance, the Federation account statement, Consolidated Revenue Fund accounts, Statutory allocation formula to be applied is as follows. The federal government will have a share of 48.5%. State government will have a share of 24%. Local government will have 20%, and special fund will have 7.5% respectively. So let me share an Excel that we'll be using for the computation of this practical sample. Now, let us analyze from the question the categories of revenue before the computation will commence. That will make the computation to be easier. So we have to prepare the Federation account statements and also the Consolidated Revenue Fund account. And the revenue allocation formula is given to be 48.5, 24.20, and 7.5 respectively. The following information were released by the Office of the Accountant General of the Federation for the year ended 31st December 2000. Ignore cost of collection and derivation. Import duties 300,000, exports 550,000, excise duty 710. Looking at these categories of revenue, we are going to be relating it to the heads from the Federation account and the Consolidated Revenue Fund account. Import duties is forming part of the revenue under the head 1 of the Federation accounts. Export duty and excise duties are also part of head 1 revenue from the Federation accounts. We have the petroleum profit tax as part of head 1 under the income tax for the Federation accounts. We have capital gain tax, company income tax as part of head 1. These are direct tax from the Federation account. So this will be recognized under the Federation account. We have sales of crude oil. This is under head 3, which is also part of the revenue from the Federation account. Royalties on oil, this is a revenue, head 3 under mining, Federation accounts. Royalty on coal, this is under head 7 or head 8, which will be recognized under the Consolidated Revenue Fund account. Royalties on limestone, head 7 or head 8, under the Consolidated Revenue Fund account as inflow. We have mining license, head 9, revenue as under the Consolidated Revenue Fund account. We have court fees, court fines, medical fees, visa fees. These are revenue under the Consolidated Revenue Fund account. We have VAT, Abuja sales. So this is also one of the revenue from the Consolidated Revenue Fund account. Payee of Armed Forces personnel, payee of Ministry of External Affairs personnel, payments of loan state governments, that is repayment state, as we're having repayment state and we're having repayment general. So this will be classified under the Consolidated Revenue Fund account. We have rents of government property. This is also revenue from the Federation, from the Consolidated Revenue Fund account. We have interest on investments, reimbursements. All these form part of the Consolidated Revenue Fund account. The following expenditure items were incurred during the year. We have the personnel cost. This is recognized under the expenditure of the Consolidated Revenue Fund account. We have overheads, transfer to development funds, transfer from contingency fund, Remuneration of Supreme Court judges. We have remuneration of High Court judges. And lastly, we have pensions and gratuities of armed forces personnel, police, etc. All these form part of the expenditure under the Consolidated Revenue Fund account. So with this, we can easily prepare our Federation account and Consolidated Revenue Fund accounts. And the sharing formula for the Federation account was given to be 48.5 for federal government, state government 24%, and local government 20%. Special fund to have 7.5% respectively. In answering this question, effort should be made to identify and distinguish between the sources of revenue that are applicable to federation and the federal government accounts. So they are still making a reference to the requirement. That is, we prepare the federation account and we prepare the Consolidated Revenue Fund account. The federation account, the federal government account, which is also known as the Consolidated Revenue Fund account. So this is also regarded as the Consolidated Revenue Fund account. Now let us move on to the slide to show the practical explanation of this question. We were told to prepare the federation accounts, and also Consolidated Revenue Fund accounts. So all the items that are recognized to be for the federation accounts, which include from import, export, excise, petroleum profit tax, capital gain tax, company income tax. We have sales of crude oil. We have a royalty on oil, royalty on coal. Royalty on coal will be classified under the Consolidated Revenue Fund account. So all these items will be forming part of inflow or revenue into the Consolidated Revenue Fund accounts. Import duties, exports, and excise duties. We have import duties, export duties. We have excise duty. $300, $550, $710. We have PPT, CGT, CIT. PPT, CGT, and company income tax. So the value $4,041,200. Sales of crude oil and royalty on oil. $12 million and $2 million respectively. So this 550,000. Total revenue, and we're told there are no charges, ignore cost of collection and derivation under the Federation account. And the sharing formula here for the Federation account, we're told 48.5 to the federal, 24, 20, and 7.5 respectively. Allocation, so we have the federal, we have states, we have the local governments, and we have special funds. So federal are to make use of 48.5%, states are to use 24%, local government are to use 20%, while special fund are to make use of 7.5% respectively. So here, this will now be equals to 0.485 multiplied by the total revenue. We have the allocation for the federal. So for states, that will be 0.24 multiplied by the total of the revenue under the Federation account. The local governments will be having 20% of the same value here, while the local government will be having 0.75 of, we're having 0.75 of the same value here. So summation of this will still give us back the same total revenue. So now from here, we now move on to the revenue, Consolidated Revenue Fund accounts. Look at all the categories of revenue that will be generated into these classes. So the first category, which will be, or which must be, the share from the federation account. We have share. No, let us forget that the Consolidated Revenue Fund account is also known as the federal government account. So here we are going to have share from federation accounts. And what is that share? Which is 10,088,000. So all other revenue that are categorized under the Consolidated Revenue Fund accounts will be recognized in this category. So we make use of all the revenue under the federation account. We move on to the Consolidated Revenue Fund account. Royalty on coal, royalty on limestone. We have royalty on coals, royalty on limestone, $80.50. $80,000. We have 50,000. Mining licenses, court fees, court fines. Mining license, court fee, court fine, $43 and $4,000, $3,000 and $4,000 respectively. We have medical fees, visa fees, pay of armed forces and pay of Ministry of External Affairs personnel. Of armed forces. Also have fees from Ministry of Foreign Affairs. Medical fee 4.5. Oh, visa fee. pay is 600 and 200 respectively. Repayment of loan states rent of government property, interest on investments, and reimbursements. Rents of government property, interest on investments, and reimbursements. $12,300, 1 and 11. So summation of this. So let's take a look at expenditure. The following expenditure items during the year. Personnel costs, overheads, transfer to development funds, transfer from contingency fund. Transfer from contingency fund is an inflow to the Consolidated Revenue Fund account. Transfer to contingency fund is an expenditure. Remuneration of Supreme Courts, remuneration of High Courts, and pensions and gratuity of armed forces personnel. So, we have the expenditure, which include personnel costs, overheads, transfer to development fund. Overheads and transfer to development fund. Overheads. $904 million, $3 million respectively. Transfer from contingency fund. This is an inflow. Transfer from contingency fund. This will be recognized as inflow. Transfer from contingencies fund. As 1 million naira from contingencies fund 2 million. Transfer to contingencies fund, that's an outflow. Transfer to contingencies fund. Remuneration of Supreme Court judges. Remuneration of High Court judges and pensions and gratuities of armed forces. We have 1.5 million, 604,50,000. This will now be equals to So this gave us the summation from the Consolidated Revenue Fund accounts. So here we are going to be having balance for the year ended to be 812,800. So with this, we've completed the requirements that was given to us from the question. We are told to prepare the Federation account and the Consolidated Revenue Fund account. Let's move on with the slide. So using the sharing formula, we have allocated from the Federation account to federal governments, states, and local governments with special fund accounts respectively. And we've also classified and calculated the Consolidated Revenue Fund account. The other two questions we serve as a practice question in Consolidated Revenue Fund account and Federation account respectively. So the question 3, we were told to calculate the Federation account and the Consolidated Revenue Fund account using the revenue sharing allocation formula of 50, 30, and 20% respectively. So whichever percentage we will be using, the examiner will advise us accordingly. Now, this is sources of state and local government finance. This is Ghana, state central government, public money. So the tax revenue in Ghana is the main source of government revenue, tax revenue collected from individuals in their private capacities and organizations. So according to the principles of public finance, tax revenue should be the main sources of finance for the public sector. Tax is divided into direct and indirect tax. So the direct tax are the tax which is paid directly by individuals and organizations. So it's a charge on income that they earn from their professions and operations. So examples of direct tax are income tax, corporate tax. So income tax is paid by individuals on their income. Corporate tax is paid by businesses, organizations on the profit which they make from their operation. While the indirect tax is a tax which is not paid directly by the person who suffer or bears the burden. So this type of tax is imposed on goods and services that are bought and consumed by individuals. So examples of this indirect tax, we have the petroleum tax, we have the value-added tax, we have the duties and export duties. The petroleum tax, such tax is put on the price of petrol or gas fuel. The value-added tax is imposed on some classes of goods and services. Import duties taxes are put on goods imported into the country, while export duty taxes are taxes that are levied on goods exported out of the country. You also have the non-tax revenue. This is made up of all revenue other than taxes generated by government. Example of non-tax revenue items are internally generated revenue. We have the fines and penalties that are imposed by law enforcement agencies and courts. And the third one, which is the internally generated revenue. So this is income that are generated by government departments from various internal activities or operations that they undertake. So the income is also known as user fee or user charge. User fee or user charge. Example of this internally generated revenue include the following. We have the fee collected by the Passport Office of the Ministry of Foreign Affairs. We have the fees collected by Vehicle Examination and Licensing Departments. We have fees collected by the Vehicle License and Examination Fee Department. We have the product testing fees received by the Standard Board, and we have academic facility users fees of the universities of Ghana. While the local government or district assemblies revenue in Ghana, we have the central government revenue. So they are income items that central governments make available to the local government or district assembly. They have the grants in aid, they have the recurrent transfer, and we have the seeded revenue. So these are locally generated revenue in Ghana. Rates and levies on animals such as cattle. We have taxes on the income of self-employed persons or businesses as auto mechanics, interest on investments, profit from trading activities and projects, collections on vehicle licenses for cars, wagons, trucks, bicycles. Cars is one of the categories of caterpillar. We have loans. An assembly can raise an overdraft or loan facility to the tune of 20 million cedis, subject to the approval of the Minister of Local Government and Finance. They also have the general and specific grants. From both local and foreign donors. Now let's take a look at these loans and grants in Ghana sources of revenue. Loans are money that our government secures from either the local or foreign sources. So local loans are contracted mainly through the central bank and usually in the form of securities such as treasury bills and bonds. The same thing we're having in the country, Nigeria. We have foreign loans. They are foreign loans which are secure from either government or international bodies such as IMF and the World Bank. Grants, these are aids from external bodies to assist the neighboring country. They are received by government from other countries and international bodies for specific projects. These are free money and they are non-refundables. Now, other public money in Ghana, the categories are government loans and advances repaid, dividends from shares in profit-making organizations. They have interest earnings, sales of government financial securities and instruments. Unlike Nigeria, we have sales of government property, sales of government equity investments, and sales of government property. Lastly, they have trust money. So any other receipt of governments are trust money. Government owes it for other organizations. So such money is called special or trust fund. An example of this is superannuation fund, which the government owes in trust for its employees until they retire. Ghana also has their revenue estimation. The Ghana Financial Administration Regulation spells out the procedure and the heads of department of the government organization should follow when estimating the revenue which the department will be able to generate during the budget year. And the head of department will identify all activities that are already generated revenue, identify all activities that have the potential to generate revenue, estimate the frequency of these activities and calculate the revenue arising from these activities, and they produce a monthly forecast, a budget, identifying when revenue flows are anticipated to take place. They also have the federal government accounts, the way we're having the Consolidated Revenue Fund account. So the federal, or which is also known as the unitary government account. Government accounts may be described as either federal or unitary in nature, depending on the form of political arrangements of the nation. So the country may be considered as a group of semi-autonomous units or territories, which may be grouped together under a federal system of government. Example is Nigeria, where we're having the Consolidated Revenue Fund account. So a country may be running a unitary form of government where such autonomous or semi-autonomous form of unit of territories do not exist. So the account of such nation will be unitary account. So this is the case in Ghana. Despite the classification stated above, accountability is done by government through the public accounts. The public account in Ghana is specified below. It is issued generally in the federal government accounts to mean all documents and records pertaining to public and trust money received into, held in, and paid from the Consolidated Fund. They are having the section that talk about their public accounts in Ghana, which include the composition of their financial statements, a statement of financial assets and liabilities of the Consolidated Fund at the close of the financial year, a summary of statements of receipts into the payment from the Consolidated Fund in comparison with the budget summary of the financial year, a statement of revenue and expenditure for the financial year in comparison with the approved revised estimate of the year, and a statement of transactions during the year and the analysis of the proposition at the end of the year for the public debt, deposits and other trust monies, the securities of government, advances, public notes, equity investment of the Consolidated Fund, a cash flow statement of the Consolidated Fund for the year, and such other statements as may be required by any enactment. So others are the regulations that are being laid down by the Ghana mode of revenue. Now let us move on to funding system. We're having public funds. They have the Consolidated Revenue Fund, Contingency Fund, Contingency Reserve Fund, Internally Generated Fund, Capital Project Fund, National Loans Fund, Trust Fund, Debt Service Fund, Counterpart Fund. All these are also categories of fund in the Ghana Constitution as is being stated. These are the advantages and the disadvantages of funding system, funding accounting in the Ghana system. Now let us move on to the funding principles in Nigeria, which is applicable to the country. Fund accounting is one of the fundamental principles underlying government accounting for record purpose. So the income of government is categorized into a series of funds. Each fund caters for a specific welfare activities of government. Part of this fund were being discussed, and we've analyzed how this type of funds were being operated. The classification of funds are grouped into three. We have the government fund, we have the proprietary fund, and we have the fiduciary fund. Government funds are used to accrue for resources which are derived from the general tax and revenue powers of government. So examples are debt service fund, special fund, and revolving fund. The proprietary fund are funds used to account for the resources derived from the business activities of government and its agencies, such as the parastatals. And lastly, we have the fiduciary fund, which are used to account for resources held and managed by government in the capacity of a custodian or a trustee. Such types of funds are Petroleum, Technology, Development, Trust and Agency Fund, and lastly, we have the Pension Fund. Now let's take a look at the types of funds that we are having. The general funds is a fund that is established for resources which are devoted to financing the general administration of services. It is meant for general purposes. It is also called the Consolidated Revenue Fund. Section 5 of the Finance Act of 1958 stipulates that the management of the fund shall be in accordance with the requirements of the Constitution of Nigeria. We have the Capital Project Fund. These are meant for capital project purposes. This is a fund created to accommodate resources meant for the acquisition of capital assets or facilities. It is known as Development Fund. And we have also made some instances on how these development funds operate, because funds will be donated to cater for some unforeseen circumstances and disasters. And this type of funds are used to cater for some of activities that may not be included in the annual budget. We have the special fund. This is a fund that is created for special purposes. Examples are South African Relief Fund, African Staff Housing Scheme Fund. We have the Trust Fund. This is a fund that resources are held by government as a trustee. So it is used for the purpose stated in the trust deed. There will be a trust deed agreement, and the purpose at which this fund is being created for will be used for such purpose. Example of this type of trust fund, we have the Petroleum Technology Development Fund, and we also have Research Foundation Fund. We have the Contingency Fund. This is a fund whose resources are meant for the expenditure or anticipated expenditure of uncertain amounts. Example of this expenditure is on natural disasters. Section 15 of the Finance Act of 1958 brought the fund into this type of fund into existence. We have Intergovernmental Service Fund. This is established to provide service to other funds. Government Clearance Fund, which helps to maintain the balance between the federal government and other state governments in respect of transactions. So the purpose of Intergovernmental Service Fund is to bridge the difference between the federal and the state government transaction. We have Revolving Fund, which is also known as Working Capital Fund. This was created to finance services provided by designated units to other departments within a single government setup. Example of this revolving fund is Revolving Loan Fund. And lastly, we have self-liquidation fund. So this type of fund is a fund into which resources are transferred periodically and out of which any money or amount left has to be transferred to a current fund. Examples are deposit fund. Deposits are money that are held on behalf of third parties. Let us take a look at revenue control, which is the last on this slide. So the term revenue control describes the various checks that are put in place to ensure that all monies due are received and accounted for. So the revenue control system in the public sector is designed to have the following elements. We have the periodic monitoring, policing the revenue administration system to ensure that services are not rendered without charges being levied. Timely issuance of demand notice. So these are the types of check and balances that are put in place on all the revenue that is being collected by the government. Time issuance of demand notice and follow-up action to track down debts. Timely issuance of all revenue documents. We have the prompt lodgement into the bank of all monies received, establishments of authority limits for revenue handling, and lastly, establishments of functional systems of internal control and constant reviews of procedures. So the practical questions that we did, this is the solution to it. So after reviewing the video, going through the explanation of how we arrive at all the calculation. So at our leisure period, you can still go back to the slide and take a look at the solution that is provided at the end of the slide. Thank you all for the time. See you in the next class.